Hey Cryptoverse, welcome to this episode of Crypto Baptist. This show highlights everything about institutions getting into crypto. Today's October 16, 2021, and I'm your host, Dan. All right, we had some good run-up and some good news before the weekend, and it was mainly centered around the Bitcoin futures ETF getting passed, and it looks like the ones from ProShares and Valkyrie is the two that I saw that updated their filing, and looks like they should be able to go live on as soon as Monday. And remember that these are the futures ETF, so it's not the one that we want. These ETF will hold Bitcoin futures, not the actual Bitcoin. That decision on the Van Eck Bitcoin ETF that actually holds real Bitcoin, that one is pretty much do or die on November 14th. The SEC can no longer delay it any further. They have to accept or reject it. So that one is November 14th. So if that one passes, I think we should smash 100K if that happens, because that's going to be very bullish, because the ETF would have to buy the actual Bitcoin, and a lot of people have been waiting for it. Institutions, people, retail investors. Now we can buy it in our retirement accounts. But nonetheless, the Bitcoin futures ETF is a good news, and that pretty much caused the run up to almost the previous high. Bitwise is filing two ETF. They're gonna file both the futures and the real Bitcoin ETF. And we have a verdict or settlement with Tether and the CFTC. So again, they admitted some wrongdoing. One is that they were not fully backed one-to-one to cash, which was what they stated before. And now they cleared it up, and they said that it's cash and cash equivalents. And I think the other issue was that all the bank account were not under Tether. I think they were mingling some of the business with Bitfinex. But now they paid a fine, and let's just move forward from this Tether FUD. Personally, I'm going to no longer talk about Tether. At this point, it looks like will Tether implode? It's going to be unlikely, because in order for it to implode, there have to be a bank run. So the $70 billion that is being backed by, all of those people have to make a run for it, and that's highly unlikely that they do. Tether is in business with a lot of the crypto companies. I mean, Celsius, Tron, Binance. So they're in cahoots with a lot of big players. They're deeply entwined in the crypto ecosystem, so it's unlikely that people would rug pull them. So this is another good news heading into the weekend. And on the opposite spectrum of JP Morgan's Jamie Dimon, we have Morgan Stanley CEO, who is stating that crypto is not a fad and it's not going away. And right now, they're not fully in it. They're helping some of their private clients to invest in crypto somehow, but they're not fully on board yet. But he's not on the same spectrum as Dimon, who is calling it a fraud and have no interest in it, and thinks that it's going to go away, which is wrong, right? And we have billionaire Barry Sternlicht. He's the CEO of Starwood Capital. They have about $95 billion of assets under management. He bought some Bitcoin and Ether, and he's saying the reason is the US government and every government in the Western Hemisphere is printing money nonstop, and you will want to have access to a finite amount of something that can be traded globally, which is the Bitcoin and Ether. It's funny, here he calls Bitcoin is a dumb coin because it has no other purpose than to store value and crazy volatile. So that's why he likes Ether, because it's programmable Bitcoin, and there are tons of other coins that are built on the system. Bitcoin maxis are not going to like that statement. Bill Miller again, doubling down on his love for Bitcoin. I mean, this was the guy that backed Amazon when it would crash like 90%. So for him to go big on Bitcoin is a great support. And the Financial Times reported that the Australian pension fund, Queensland Investment Corporation, they have about $90 billion of assets under management, will dip their toe into crypto in the future. They said they will, and it's going to be a small amount. It's not going to be like a material percentage of their portfolio, but we should see more of this in the future. And if we have pension funds, endowments, family offices, corporations just dipping their toes in Bitcoin, Bitcoin's going to go above 100,000. On the regulatory front, Coinbase is trying to push for further guidance and clearance on crypto. So they're heading up a digital asset policy proposal. And you can read it here, some of the measures that they want to pass. And along with Coinbase, Andreessen Horowitz is also heading to DC to push for further guidance and policy on crypto and Web3. And that's good. We want to see regulations, we want to see guidance, because those will protect retail investors and would also allow institutions further guidance to come in. And you can see why Andreessen Horowitz wants clearer guidance and policy on Web3 or crypto. Here they publish a report on the Web3 landscape. Now, if you guys don't remember, Andreessen, his first big hit was in Netscape when the internet Web 1.0 was born, and the guy has been compounding on his wealth since then, being able to get access to early startups and investing in them. And now he's trying to hit a home run again with Web 3.0. And for us retail investors with crypto, the landscape has definitely changed. It's no longer just for the haves in the VC or Silicon space. With crypto, all the coins are in the open market. Ethereum, Avalanche, Solana, Tron, Algorand, they're all on the open market for you to invest in right now. You don't have to be a billionaire, millionaire VC fund to invest in them. You can simply go to exchange and buy them. And that's the beautiful thing about Web3, about crypto, about decentralization, is that everybody have a fair starting point to get rich. And it's not just going to be Andreessen. All right, that's all I have for you today. Have a great weekend. Take care.